Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Welcome back to Digital Currents. Mark, we're back on schedule. We're filled with turkey, and we're also filled with promise for finally breaking the ceiling. So, Mark, happy Friday, and I'm sure you're just as excited as I am.
I know. Happy Friday. Great to be back. Missed everybody over Thanksgiving. Hope everybody had a wonderful holiday. I had the worst bad karma you could have. The one day that I absolutely love, right? Turkey, dinner, all that stuff. I get the stomach bug. I'm in the hotel asleep. Everyone else is. Now, I did make up for it the next 2 days. I ate a lot, so it was a 24-hour bug. But anyway, so I'm also full of green candles. So I have the green pants on today, and the sock game is the Bitcoin moon. Look, we hit the 100K mark this week, falling back a little bit below it. But look, it is a super exciting week. Not just because it's a big round number. I mean, humans like big round numbers, although they don't really mean that much, but people like big round numbers. But I think it's one of those things that's going to catalyze a lot of attention, right? There's lots of headlines, lots of people talking about it. You got the political tailwind, which is accelerating. Now, there's still wood to chop and work to do, but the appointments that have been made so far are all pro crypto. I mean,
all of them. Yeah.
I mean, it's pretty amazing. And it doesn't mean that tomorrow everything's going to be great and there will be a strategic Bitcoin reserve, but it directionally signals that the statement that, again, Trump made the statement, someone else wrote it for him, so I don't think he really came up with this. But, when he said he wants America to be the leader in digital assets, which I joke is a little arrogant. Well, mostly things he says is arrogant, but a little arrogant in the sense that we're only 20-ish% of volumes around the world. So, and I this is my favorite line, right? That Americans are like Notre Dame football fans. So here I am wearing my Notre Dame sweatshirt because I got some meeting with some Notre Dame folks tonight, and so it actually works to wear the green pants too. But Notre Dame football fans remember a past that never was, right? I mean, we haven't won since '88, but yet if you ask any Notre Dame fan, we win all the time. We win the championship all the time. Like, well, in the '40s we did, because the coach got all the players from Army and Navy to come back as 28-year-olds. If you do that anymore except at BYU. So, but Americans are the same way. They're like, oh, we're always the best. I'm like, well, not necessarily. I mean, we do have some good innovation, but in crypto and in digital assets, so much of the activity is global.
Right.
And, you're seeing it with the Latin American incubator stuff. We're doing it, and we're seeing it with our Asia team on the ground over there, and we're seeing it in Europe even, far from being an open-air museum, which, Byron Wien likes to call it. There's some real technology coming out of that part of the world. So all that together, super excited for what we do day in, day out, which is focus on the ABCDs, right? These elements, these 4 building blocks, like the ATCG of the digital age. And one of the things that I get super excited about, but it's hard to put it into words. I'm struggling here a little bit in the sense that the future is made of things that you can't even really imagine, right? Which is kind of an interesting thing. And so there are innovations happening that are going to spur other innovations of things that we really can't comprehend. And one, we say we like the intersections,
Absolutely.
the A's, the B's, the C's, and the D's. Well, let's take the AI and the blockchain piece for a second. One of the things that I think is really, really interesting is this agentic world that we are moving toward very rapidly, right? Where we have these AI agents that do things for us, with us. And that's kind of that's where humans become better because, we spend less time doing the mundane or the trivial, and we have the machines to do it. But then the machines are going to pay each other while they interact. Well, that's all going to be on blockchain rails. And so there's this token economy. And, one of the things I thought was interesting, X. So in the last month, right, which is not a long time, and it's been a month since the election, in the last month, Bitcoin is up about 32%.
Right.
It's a good number. I mean, that's a pretty big move. Ethereum, right, which is a toolkit, not just a token. It's got, things that are built on it that facilitate. It's up 46%. Okay, it's a little better. Let's just, randomly pick one. Avalanche, one of our faves.
Sure.
Another token that's kind of a platform and a building, up 94%.
Right, especially lately.
Okay, that's interesting. Polkadot, one that some people have talked about as this L1 layer for kind of the things in between the base layer and the top layer. It's up 150%. But the two that I'm struggling with a little bit, although it's funny, I did a show, I strayed. I did another show. I did another show, Altcoin Daily. And I love these guys. It's two twins, two brothers. And at the end, we talked about Bitcoin, we talked about Solana, we talked about Ethereum.
Sure.
But at the end, they always like, what altcoins do you love? Like, guys, we don't do altcoins. I mean, I told the story, I think we talked the story last week that one of the young guys said, hey, we should put it in Doge. Like, we don't do meme coins in our institutional fund. Maybe we should, but we don't. But Doge is up 123% versus Bitcoin's, 30. So 4 times the beta. All right. But what meme coins do you like? You're like, all right, look, I don't like them, but I can see a case that there are two guys, Charles Hoskinson and Brad Garlinghouse, who have pretty tight ties in the intelligence community and the government. And long story short, there have been some noises made that they're going to be part of this advisory council or whatever. And XRP,
right,
327% in a month. But I think the big winner, maybe I had this backwards. Yeah, I have it backwards. So Cardano, which I joked on the show. I said, look, my problem with Cardano is I have nothing against Charles. I have nothing against Cardano itself. But you and I have been doing this for a decent amount of time now, coming up on 6-7 years of investing in the digital asset system. That's a meaningful period of time.
Sure.
We've never met we've never met a developer actually building something on Cardano.
Not once. Not
we've met Ethereum people, we've met Solana people, we've met plenty of Bitcoin builders and stacks and L2s and L2, but never. And so that's just weird. So, but Cardano's up 228% because, I think there's some thought, and this actually gets me a little nervous. There's some thought that these protocols which have been trying to bridge the gap between old, right, SWIFT and the banking system and BIS and all that stuff, and new, meaning open source, permissionless world like Bitcoin. Well, what we need is something in between, and that could be XRP or Cardano. That sounds CBDC-ish to me. I don't want CBDC. I just don't want it. I don't think we need it. I don't think we want it. And in the last couple weeks, the Donald did kind of say a few things about that. And anyway, so lots more to be written on this, but I do think it's been a very interesting week.
Yeah, you put in so many great nuggets, Mark. I'll pull apart a couple there. And overall, we're seeing just a lot of joy, enthusiasm post-election for all the reasons that you said, primarily because we're finally kind of taking out the old and bringing in the new as far as folks that really kind of understand a digital first world. So overall, markets are up 1.2 trillion in crypto since the election, which is a staggering number.
X, say that again. Say that number again.
Let's double tap this. 1.2 trillion with a T, trillion with a T since the election.
And remember, you and I would have to stay on the air for 31,710 years.
Wow.
And spend $1.20 a second.
Wow.
To spend 1.2 trillion.
Right. So for those who can't get enough of digital currency, we will try this marathon at some point soon, see how long we last. But it's to your point, Mark, we're getting into the shifting world where we always used to say Bitcoin was a tide that lifted all boats. And so we're seeing this happen, this breakout happen, where I think we're seeing a democratization across crypto because we're seeing this rise in the altcoins. So basically as of earlier this week, I think it was as of Tuesday, in terms of just the overall market dominance, Bitcoin actually was down relative to the rest of the market. So in November, it was about 62% of that total market cap on crypto. It went down to 56% in around the same amount of the time. So part of this is that big winner that you mentioned on XRP. And so we look at that and Cardano. We mentioned this idea of sort of these tax incentives so that you could bring crypto back to the U.S. And so folks like Ripple, who are based here and domiciled here, they're some of the big winners. And to your point, stablecoin developments, Ripple is on the verge of creating this new stablecoin. One of our portfolio companies helped power this in Stably. You're seeing this rise of ETF applications launched last year, and some of the kind of not so glamorous work on the regulatory optimism. Yes, we have a new administration coming in, but Ripple was the beneficiary of winning a lot of these lawsuits over the past couple of years, which eroded some of their value in the markets. And so, is it, 450 X much more valuable than before? It reminded me, Mark, of 2018. And in 2018, we got a big rally and it surpassed Ethereum in market cap for a very brief time.
Or a very short period of time. And that's an interesting point. So as excited as the XRP army is, right? And they are super excited. We're still about, 70% of where we were in 2000, 17, 18 at the bubble peak. And there's a reason for that. And it's because, so far there's not been any there.
Right.
The number that gets me though, X, and I want to make sure I have the right number because it's just a crazy number. So
lay it on me.
The crazy thing is Circle, which is a real company. Freeway, it's a real company. They do real things. USDC is the second largest stablecoin. Great leadership, ex-Goldman guys. I mean, just really, really good. Has a valuation of $5-6 billion. Okay, that's pretty valuable asset from zero, right? I mean, we're talking about creating real assets from nothing. That's our business, venture capital. But that's awesome. But XRP has a active market cap of 105 billion, fully diluted. Because this is the bad part about XRP versus other is they got a whole bunch of stuff that's owned by these other people that can like fiat be created out of thin air. So the fully diluted value is 175 billion with a B. And you think, okay, but Circle processes a lot of currency every day,
Right.
and a lot of transactions. And XRP has a lot of promise, or so they will tell you, but there's no there. So that relative, even if we use the non-diluted, which is not the right number, but let's use that, is that entity and the promise 20 times more valuable than a real entity? I struggle with that. I do.
Right. And I think there's some interesting things too, Mark. Obviously I was trained as a value investor. I think you can kind of appreciate some of these things from your old Chicago days. One thing you're not necessarily supposed to do is sell your stock and buy a non-core asset. But you can argue that that's kind of what MicroStrategy did, but you can argue that their core strategy now is Bitcoin. So
yeah,
many companies since pandemic, they've been using stock breaks or tax breaks to buy back stock. So MicroStrategy did the reverse. They actually sold 3.7 million shares to do what? To buy more Bitcoin. And so they put 1.5 billion in Bitcoin. So it's so funny, Mark, to think about this, the mechanics of this, right? Their stock price is sort of driven by the increase in Bitcoin. Then they sell that to just buy more Bitcoin, which creates this kind of like circular
well, it's a total flywheel, and you have the haters saying, well, it's a Ponzi. Like, no, a Ponzi is where I take your money and I give it to other investors who are cashing out. That's not what's happening here. Mm-hmm. What's amazing, and Saylor talks about this openly. He's like, look, I am arbitraging these interesting dynamics in the traditional financial markets. So he does two things. He issues equity, which you just described, and he also issues debt. Right. Well, in the equity side, he says, well, I issue $1.5 billion of new shares, okay, backed by 500 million of Bitcoin, and I go buy $1.5 billion of new Bitcoin. So I just captured, like literally captured $1 billion of real value, okay? And he said, but you diluted me. Well, yes, I did. But the Bitcoin yield, right, the new Bitcoin that gets added, so yes, you have fewer shares, minutely, but you have more Bitcoin. And so the yield, the effective yield, is somewhere between 20 and 60%, depending on the price he's been getting in the market. That's an amazing trade. But the even better arbitrage, and this one is a structural arbitrage. There are these funds, ETFs, mutual funds, professional funds, that by mandate, in some cases by law, can only own bonds. Right? They're not allowed to own equity. They're certainly not allowed to own Bitcoin. And they want bonds, right? There's this insatiable demand for bonds. And so because there's this insatiable demand, the price of the bond, the interest rate that you have to pay to lend them money is very low. And in Michael's case, zero. Right? So he's basically borrowing money for free in a convertible form, and then he again is capturing this arbitrage, this increased value of the Bitcoin, because the Bitcoin's rising as the currency devalues. So he's swapping fiat, which goes down, for an appreciating asset, which goes up just by the math, because one Bitcoin is one Bitcoin. And if my dollar depreciates by 2%, my Bitcoin went up 2%, because the Bitcoin didn't change. It's just the value went up. So there's this, it is alchemy. And because there's this insatiable demand, he can issue lots of bonds and then buy this appreciating asset. And so the flywheel effect is pretty extraordinary. Now, people say, how are you going to get your value out? You can sell your shares because the shares trade at some level of premium or discount to the NAV, the underlying value of the asset. And someone said, well, that's not a real company, right? They're on property, plant, and equipment. You're right. You're totally right. In the old days, companies were judged. You're a big company, a big, strong company if you owned stuff, smart yaks and tractors and people. Well, now most of the value of the most valuable companies is about intangible assets,
Right.
and goodwill, and in some cases, these financial assets. And so if I can buy these financial assets, again, at a discount, I win. And, it's interesting. People are like, well, in 2000, this didn't work out, because Michael's stock went up, from $3 to 300, and then it crashed 99%. Yep. Why? Well, because back then, he didn't have anything. He had a promise that he was going to do all this stuff with his consulting company. And the short squeeze, the people would get short because they're like, there's no value there. And then he would, do a short squeeze, kind of like what Elon did when he was running out of money. And the stock squeezed all the shorts and they all went up. But then guess what happened? There was no there. He didn't have any assets. And so the stock fell. Well, fast forward 20 years, you're like, well, yeah, my consulting business, that's really not doing anything. So what if I just took the money I have left? It's not a lot. I bought this asset. And then I borrow more money to buy the asset, and he starts this flywheel. Well, now that the flywheel's going, there's real value. I mean, he owns 400,000 Bitcoin.
Yeah, around 38 billion, right, acquired in total, which, Mark, is 10 times the amount of the next closest, which is MicroStrategy. He's also been kind of flirting with this idea. They own a pedestrian 3.3 billion in BTC. And then the trend, Mark, that if it's creating shareholder value, there is this domino effect, to your point, where other companies are starting to look like into the strategy. We saw Microsoft sort of kicking around the tires, where it's so funny. They don't want to go all in on this stuff, but it pains them to kind of lose the opportunity. And so you see some of the, reports from some of their earnings calls, and it's like, well, we're considering, if you please. It's like the most polite way to ask for an investment.
Well, and it's like, hey, we're considering. What do you guys think? What do you think?
Exactly.
Only if your stock price go down, the stock price. Okay, stock pricing down. Okay, now we're actively considering.
Right.
Stock price go down. Stock price go down. Oh no, it's not. Oh, we're going to talk to the board about it. Did stock price go down? No, it's not. As long as stock price doesn't go down, they're going to keep talking about it. Because here's the crazy thing. When you're a company and you're good at what you do, Microsoft is, Apple is, Berkshire Hathaway is, you're going to accumulate cash. Okay? Now, in theory, your job as a CEO or as a company, a management and a board, is to deploy that cash into positive IRR businesses and give the money back to shareholders, or give me back my cash. Right? That's your job. Holding cash on the balance sheet is not a good thing. Why?
No.
Well, because we know that the yield on that cash is probably equal to or lower than inflation. And so you're destroying my value. That's my value. I'm the shareholder. And, the management is like, no, that's our hoard, to make us ready to leap at an opportunity when it comes along. Well, Apple's had $200+ billion of cash because they're so, profitable, because they charge, $1,000 for something that costs, a couple hundred. And we all pay it gleefully. But Michael figured out, well, if I'd swapped it for this thing that, again, it's not that Bitcoin grows, right? That Bitcoin doesn't get bigger. It doesn't change. It doesn't, shed cells. It literally stays the same. It's just an entry on a ledger. But the currency, which we value it at, changes depending on where you live. And we've talked about this before. There's never been a bear market in Venezuela for Bitcoin because the bolivar was going down so fast. Turkey, same thing, that the price, not value, the price of Bitcoin in that currency kept going up. And so these companies are now getting pressure from shareholders saying, hey, that cash, you're stealing money from me. Do what he did. That worked. And it doesn't have to be Bitcoin. It could be any asset that stores value and then is value in the currency. So it could be gold. It could be silver. It could be, and people go, oh, those are speculative assets. I'm like, well, no, not really. I mean, they're stores of value that are superior to fiat, which decreases in value over time because of this thing called inflation. And look, our inflation rate, it's not that bad. Look, we all won the lucky, sperm and egg club, and we get to live in the greatest country in the world, and
Genetic lottery.
I mean, because I was watching this documentary. Somebody did this documentary for the Bitcoin 100K, and it's really nice, and it goes all around the world because again, this is a global phenomenon. There are countries right now where the inflation rate on a monthly basis is double digits, 26, 28. One was like 82%. Think about that. Think about being a shop owner and the price in a month of the things that you have to pay for, cost of goods sold goes up 80%. How do you survive? Well, you have to pass that along to the customer. Well, maybe the customer is on a fixed income and they can't afford to buy. So, I mean, that world, that fiat inflationary world, is why we still, as great as the world is today relative to where it was 50 years ago or 100 years ago or 1,000 years ago, far less poverty, far less crime, except for the horrific thing that happened this week in the U.S. I mean, and there's a lot of horrific things but the really horrific one, in New York. But
right.
But the world's a better place. But it's still not perfect, and there are certain swaths where it's still kind of pretty bad. And most of it relates to this bad management by governments, kleptocracy, right? The government steals and the people suffer. And a currency like Bitcoin, or an asset, I said not a currency, an asset like Bitcoin, because Bitcoin is money, right? Money, an asset that exists in the absence of a liability, like gold. Anyway, it's a fascinating time because if you play it out to its end, and we should have Murray Stahl as a guest sometime. Murray runs this firm called Horizon Kinetics, and Murray's an old school. I mean, he's even a little older than me, and I'm old. And he was one of the earliest adopters of Bitcoin. He's got one of the largest mining organizations, non-public, private. And he runs a value investment shop. And everyone's like, what's a value investor doing in Bitcoin? And like, I got it. I saw it. And I joke, Murray's the only guy who makes me seem bearish. Like literally, when I'm in a room with him, I feel like Jim Chanos, like perma bear, like, man, I'm just not bullish enough. And the reason is I look at it, digital gold, right? My Irish gold, right? Digital gold. And then it becomes the base layer of money, and we build on top of it, and it goes into every central bank in the world, and whew, it's awesome. And Murray's like, you're just thinking way too small. You're just not even thinking about it right. He says, this is reverse Gresham's law. Like, okay, Gresham's law says bad money crowds out good.
Always.
And we've seen that everywhere, right? It's the wheelbarrows of Deutschmarks and the hyperinflated Weimar currency, and then Zimbabwe, starving trillionaire or starving billionaire, and in Venezuela with the wheelbarrow that wouldn't buy you a chicken. So we know that bad money eventually crowds out good because they just keep printing more of it. And he says, no, that's the way it used to work before the invention of Bitcoin. Now we have sound money for the first time ever, real money, and that will eventually crowd out all money. And that's $100 trillion. Global currency is $100 trillion. He's like, we're absolutely going there. And the first time I heard this, and it's like 5 or 6 years ago, I'm like, come on, Murray. I hear you, but he's like, no, you just think about it wrong. And over the past few years, I've thought about it a lot, and I think he's right. I mean, I really do. And it's not going to happen tomorrow. I mean, it's not going to happen because the governments are going to fight this because they like their fiat fiefdoms. They like their kleptocracy. But it's coming. And when you actually step back and you have that aha moment, that's what Bitcoin is. I mean, literally, I need the mind blown emoji. I mean, it is. Let's see if I can make this thing by the fireworks. Come on. And maybe it seemed to me I turned it off. Thought I could get it to do the fireworks, but
Changing gears slightly, I wanted to come back to a story, Mark, that we teased out before the break. And I'm glad that we waited on this one because there have been some new details, and I'm not sure the details do much to change some of the conspiracy beliefs or allegations. Maybe they just make it worse. But here's the story, if you recall, Mark. So we always talk about how in the past, the superpowers and the dominant countries in the world were measured by their naval might, and that kind of has been shifting towards compute might or chips, trading chips for chips. That continues now in the summer in the series that we called Ship Wars and Chip Wars. And so the next chapter, this was on November 18th. So 2 communication cables were severed in the Baltic Sea, right? And so immediately 4,000 military staff took off to the same body of water and for one of Europe's largest naval exercises ever. So it was called the 12-day freezing winds drill. Okay. And so they were trying to basically figure out what happened, and they deployed a lot of technology. And this is a pretty interesting part of the world, right? Because you've got 8 NATO countries surrounded by Russia, and you have possible sabotage to, like 40 odd telecommunication cables. This is critical for gas, internet, and they're relatively shallow. And so they have been really on watch. So it's basically around 15% of global shipping traffic is just in this kind of one area.
Yep.
And so the idea was, what happened? And so as part of this training exercises, more is being revealed, but it is possible that it was just a lowly ship anchor that had kind of cut the cable. But, that's enough to cause a lot of people to deploy 4,000 troops just right away, right? Because I think this is just a big marker of an example of, this is a part of the world that is, on high alert, using probably one of the most sensitive type of assets that we have, which is technology. And if you're cut off, it's the equivalent of putting in a strike team that is going to cut you off from the rest of the world. And you could argue that some of these cables are more valuable than really any other global resource in a short of fresh water. Mark, come on. I want to talk about this one. What do you think?
No, look, this is so fascinating, and you're so right. You think about networks. I think about what a network looks like of these interconnected lines of drawn. And let's think about the early networks, the Roman roads, right? That still exist today. That's pretty amazing, right? You built something 2,600 years ago, and I've walked on one. I mean, it's perfect. Like, wow. I mean, that's incredible. I mean, nothing lasts that long. But the Roman roads, right, where it was this network, or railroads. You look at the picture of Europe before the railroads, and you look at the picture of Europe. I mean, there's so many railroads, and and they were the most valuable assets in the 1860s and 70s into the 1900s. And then you think of the air traffic, right? The network that makes, and now we've got the chemtrails and all that stuff. But undersea cables.
Oh yeah.
Right. If you think about first computers, totally solo. Each government had one. Charles Darwin famously said, I think one computer per country is probably enough. That would probably be enough to solve all the problems. But then if you had a computer in New York and you had a computer in London, how are they going to talk to each other? Well, we didn't have any satellites yet. And so let's lay a transatlantic cable, which the mind is blown. And then, one of my favorite parts on this is, so you laid these cables and you put fiber optic cable and you figured out how to shine ones and zeros down on a fiber optic cable. But once you had that cable down there, like if you reached capacity, if you filled it up, well, how are you going to get more? You're going to lay more cables. I mean, that's expensive. And so this guy, we've talked about him in the past, this guy invented a technology that multiplexes. It takes white light, turns it into multicolors, and all the colors take the same amount of data. It's like, that's just incredible innovation. Long story short, you have this incredible network. If you've seen the picture of, it looks like a neural network, like the brain, and it's all these cables. Now, I find it interesting, back to the China and the arms race and both of the incidents, because there was an incident in the Mediterranean and then the second incident up in the Baltics.
Right.
Both times it was a Chinese frigate, just forgot that their anchor was trailing behind them for 100 so miles, that, tugged on these things hard enough. Because imagine, because you've seen these cables. I mean, they're not small. So your anchor hits it. Okay, but to break it, I mean.
So apparently this hybrid is with some degree of regularity, and I never thought I would be looking at Chinese underwater sea cables as much as I have been in the past week or so. So apparently there's about 150 that are damaged each year, and so that comes from all sorts of things like power lines and gas power lines. The Baltics are particularly shallow. I will say, Mark, that the Chinese did come out and say that they would be offering to help with the investigation. Yeah. Russia was surprisingly mum about that. So it's one of those things where it kind of reminds me, Mark, have you ever seen this movie? It's with Daniel Craig. It's called Knives Out. It's just like a whodunit. It kind of reminds me of that, where it's like you've got a lot of people who could potentially have been the culprit, but everybody's willing to help. So you can't really say, okay, this person is being a little bit more standoffish, so it must be them. So,
and it could have been absolutely a total accident. Because you think about it, you think about how many ships travel,
right,
and how many cables there are, and the likelihood that someone's anchor, okay, it happens. And to your point, there's undersea volcanoes, and there's other things that happen, and but at the end of the day, it shows a couple things. One, the value of networks.
Sure.
Networks are incredibly valuable. And we just did a webinar yesterday on this, on space. Because now you take the undersea cable network and you see what the risk factors are, and you say, well, what if we moved it up extraterrestrially, not on the ground, and you created that same sort of network with satellites. And here's the amazing thing, is that undersea cable can go from New York to London and London to Paris, but then you still have to get it, or let's forget Paris. Let's go to Casablanca. You still got to get from Casablanca into the heart of Africa. Like if you've seen the picture at night of the world, everything's lit up except Alaska and Africa. I mean, they call it the dark continent, right? Because there's nothing there. Well, I saw this presentation the other day where using, and I think it was an ad for Starlink. So I mean, Starlink's not the only one, but it's one of the best. Basically showing how this farmer in rural Africa now was able to use kind of automated tractors and his yield on his farm was going up, and then he was able to use, the futures market to sell his crops forward. And you're like, oh my gosh. And again, the network and the connectivity, as opposed to just be a little farmer in the middle of Africa where you can't get to anything, is extraordinary. And then the guy we were doing the presentation with was like, well, we just invested in a company that makes satellites to spy on the other satellites, make sure that they actually are communications nodes and not little gun satellites to shoot down the communications nodes that they don't like. And you're like, oh my God, right? Dragging the anchor across the cable could be like a little pew, pew, pew up in space, shooting down, certain, and it boggles the mind. And the one that I heard this quick,
and I'm some business. This is all run by tweens. I think this just reeks of locker room banter and, pre-adolescent kind of behavior about, I'm going to spy on my satellite with your satellite, and I'm going to make a bigger satellite. And in the end, we're all home.
Oh, you mean? But I'll tell you, and he may, that person may actually be, watching us. And it's such a good idea. I don't really want to talk about it out loud because it's his idea. But he said, given that you've got these, this layer of satellites now,
yeah,
we could fit each one of those satellites with a micro photonic plate, solar panel, and you're way closer to the sun's radiation outside the atmosphere than down here. So we need much smaller to generate the same amount of electricity. And we could do all the Bitcoin mining up there.
Oh.
I mean, that is not a dumb idea. That's actually because once you create the Bitcoin, you can beam it down to the network through the satellite link. I loved it. I thought it was so cool.
It touches on a pretty interesting point, Mark, that we've been going towards. If you kind of look at the overall rising, global GDP, people getting lifted out of poverty, that's generally a good idea, right? And that's kind of been funneled by things like globalization. And we're seeing this shift. Obviously, it was kind of occurring over the last couple of years. We're seeing this a lot in technology, right? So nations are shifting from globalization to protectionism, and they're providing sort of this domestic infrastructure. We're seeing kind of the rise of sovereign AI and kind of tying some of these stories together. There is this kind of effort that's getting made now on how to navigate open source Chinese AI models like Alibaba's Qwen 2.5. And so these models have things like censorship lifted out, so you can kind of actually query things that are politically sensitive in there, and you can actually see that right into the code, which is a good thing. But a lot of companies are expressing some concerns. One of our favorite company names, Hugging Face, their CEO has been very vocal about some of their concerns about the geopolitical reliance on the Western side of Chinese AI. And I think what we're going to start seeing is you're combining so we've got the sea covered, we've got the space covered, and then we obviously have the land in places like Taiwan identified. But I think ultimately what you're starting to see here is this big shift that domestic compute is a very important thing. And you're going to start to see soft power transition into computing power. And if you're seeing some of these more sensitive statements saying, hey, I'm not going to use, a sovereign AI, even though it's good, for fear of any kind of reverse engineering or some sort of corruption. I think these are concerns that we didn't really have to think about before. I think maybe there were some maybe ill-founded concerns, but these are real companies now that are making big decisions into this. And we've seen a place like the Middle East become a neutral ground for places like Google and for Microsoft to invest. I mean, it's literally in the middle of the world. And so if you have kind of the two extremes now, if you have, the US China on one side, Middle East on the other. Everybody's sort of investing into these different areas to get this rising compute. It's a real fascinating move right now. And I think the beneficiaries, number one, are going to be the technology companies. It's going to be Bitcoin. And, you know, maybe it'll be photonics that can think about a clever way to.
No, look, I think there's so many really critical points that you bring up. And, you know, one of them is this idea that, you know, look, Adam Smith was right 500 years ago and is still right that comparative advantage is a good thing and people should do what they're good at and then they should share and they should trade. And that is a far superior than everybody trying to make all their own stuff. And so, you know, it's like insurance, right? Each company having their own pool of insurance is far inferior to a country or, you know, the world having one insurance pool. That would be far better. That's how you socialize risk. So same thing with AI. If I ask an AI tool to give me an answer and they only have this much information out of the whole world, I'm going to get an inferior answer. And I'll give you a silly little example. So Southwest Airlines is not part of Sabre, right? So if I query to get a flight, I'm going to get every answer except I think JetBlue and Southwest are outside of it. Well, it could be that Southwest has the perfect flight that I need, but because I'm in this pool asking this tool, you know, to find me a flight, I'm not going to even know about it unless I go outside. Well, that is a terribly inefficient. And let's say the pool shrinks because United wants their own. Well, it's like my beloved Irish and their own TV network, right? We have this really bad problem with the, you know, playoff system that we can't be above a certain level because we're not part of a conference and because everyone's mad because we have our own television deal and we don't share. So if everybody got their own deal, well, then your conferences blow up and your system blows up. And if every airline had their own system, I'd have to search 12 times. So it's very inefficient. And AIs that don't have all the data give you bad answers. But because you got it from an AI, oh, it must be right. I mean, I struggle with this all the time as look, ChatGPT to me was unusable 2 years ago. I thought it was useless. Today, I find it very interesting and it's basically replaced Google. I can't tell you the last time I did a Google search because Google search is useless.
Right.
But the problem with ChatGPT is it does give me lots of interesting stuff. When I ask it for ideas or, you know, inspiration or help me think about this problem, it's actually really good at that.
Yeah.
But man, when I needed to give me facts, like I had to ask it 4 times the other because I had heard that this one company was the most successful company in our business in venture capital in the 2018 vintage. And I was like, I want to fact check that. So I asked ChatGPT. It gave me a list of the top 10, no mention of this company. I'm like, oh, that's weird. Okay, let's ask it again. It's a slightly different way. I get a different list, still no mention. So finally, I just said, is this company, you know, what's the valuation of this company? And it was orders of magnitude bigger than the one they told me was the best.
Wow.
I'm like, okay, that's a problem. And so if I have to fact check everything, now my productivity just went from being enhanced to maybe actually being degraded because I'm spending so much time fact checking and trying to come up with the right prompt instead of just a prompt.
Maybe it's a good market to give a shout out then to our friend Ali. We had that lunch right before Thanksgiving. And so he presented this potential solution, right? He said, imagine if Google and ChatGPT had a baby and that's called Perplexity. And so I downloaded it for that. I know it was a little late to the party. Some folks and listeners are going to say, how have you not had Perplexity? Well, we have a lot of apps and we don't have a lot of hours in our day. So I got to Perplexity and Mark, you got to try this one.
All right.
Because I think it solves some of these issues. It doesn't solve everything, but it gives you at least the underlying sources and it gives you suggested searches, kind of like Google. So this weekend, we're going skiing, bring our 3.5-year-old there for the first time. I am just really reducing my expectations. And in words of our old soccer coach, Andrew Marshak, the team decrease your standards, increase your opportunity. So my standard is just safety and to have fun. Yeah. But I was looking at, okay, what are the things to do to keep, your 3-year-old ready for his first time on the slopes? And it gave me a nice, ChatGPT style 8-point list, and then suggested topics that I wouldn't have thought to ask, such as, how do you find the right outfit, or how do you find the right ski resort? Some things that, are a little bit too late as we're going to be leaving in a couple of hours, but important nonetheless. And I think we'll probably transition. I know we're running out of time, Mark, to look at the chart of the week, which where this is going, Mark. It has to be what the price of BTC is. So I will share my screen. We'll do something a little different. We'll go to a live view of the market because I think it's that significant. And we'll kind of look at this candle. And so this gives us a view, and let me know if you can see.
Yep, got it,
Mark. So for those that are on audio only, I'll dictate as per usual. We'll get Mark's comments in here. And what this shows is just a thing of beauty, right? This shows a gradual steady state in 2024, the early part of the year, and then a sharp rise into April, another kind of steady state, and then, of course, the runaway success since October and capturing that ever so beautiful 6-figure target mark on BTC. We're a little bit down, which is actually what Saylor predicted. It's what you and I predicted, maybe closer to the fair value. Saylor went on to be even more enthusiastic, as he tends to be. He thinks that the run-up might be more like 180. We shall see. But Mark, for the first time, I received a text message from, I'll give a shout out to my uncle-in-law, who's a huge maxi. A maxi upon maxi. He said, Xavier, congratulations on 0.1M in BC.
Well, it was the 0.1 million.
Yep.
And from 100K to a million, from 0.1 million to 1 million.
Yeah.
Which, the idea to go from a couple trillion to 20 trillion for what arguably is the future of money, just not even a heavy lift. As I said, that's 1/5 of Murray Stahl's number at 100 trillion. So what I love about this chart is a couple of things. So one, you have the, runaway success in January, February, around the halving. I mean, not the halving, in anticipation of the halving, but really around the approval of the ETFs.
Right.
And, right after the ETF approval, we fell. And everyone's it was sell the news. And then, we just go totally parabolic from, 40 all the way up to 74. And we just like a rocket ship. And it's the beautiful thing. But then we went into this, and we talked about this a lot, this ugly distributive pattern from February to September, where we made 1, 2, 3, 4, 5 lower highs and 5 lower lows. Well, with the winds of change in Washington getting stronger, suddenly you saw this change in September, where we started to make the first higher high, and then we made a higher low, and then we made another higher high, and then we had the election, and then we completed what is called this cup and handle pattern, where you got back to that 70,000. And once you broke the old high of 74, you knew you were off to the races. And the reason for that is the bid ask is driven by who's most motivated, right? If the miners need a higher price to cover the cost of electricity because their block rewards got cut, they're going to hoard those Bitcoin and not sell them unless the bid comes up. All right. On the other hand, if they've got a lot of inventory and they need to pay bills right away, they're just going to sell. And because they're selling, the bid can actually go down. And so what happened here is there just wasn't very much for sale. And suddenly everybody's like, oh my God, I got to front run the U.S. government. I got to front run, a whole bunch of big buyers. And the biggest buyer was Michael Saylor saying, I'm going to do the 21 and 21. I'm going to issue 21 million of equity and 21 million of debt, and I'm going to go buy a whole bunch of Bitcoin. And now the marginal seller was this big futures wall at 100,000. And you can see we kept bumping 99, 98, the famous picture, you've seen the movie Maverick, right? Where 9.9, Mach 9.9, like, come on, come down
a little bit further.
Yeah. And well, that was after he got to 10. As he got 10,
That's right.
10 points, just a little push. But the 9.9, he's like, come on. And he got to 10. And so, but once we hit the 100, then you have a problem because all those shorts, right? The people who've sold short suddenly have to cover. And we took out, I think the number was like $650 million of people that got liquidated that, were in the wrong, and they were offsides. And of course it happened at night when we're sleeping, and probably the Asian market. Yeah. And long story short, we got all the way to 103, but then those, short sellers regroup and they're like, all right, we'll just move our stops up to 110.
Yeah.
And so they start slamming the price back down. And so now we're back down below 100. But
so Mark, you're also seeing too, a little bit of this drive from the U.S. retail market, right? Because I'm sure you saw that the price on Coinbase is higher than the price of Binance. And who uses Coinbase? U.S. retail audiences.
Yeah. Well, and Coinbase's app became number 1 in the App Store. Yeah.
Here you go.
So look, all this is good. Mm-hmm. All of it is, green pants, green candles.
Mm-hmm. I mean, Mark, if BTC is anything like gold, and this was an exercise that JP Morgan conducted, where basically the total market value held of gold for private investment, if you kind of mirrored that for Bitcoin, the fair value would be 158K. So take that for whatever it's worth on that. But of always, we'll remind our listeners, please subscribe, rate, review. We have been really enjoying the feedback. We've got a couple more to close out the year. We'll try to find something special to do. And as always, we'll remind our listeners to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.